You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, welcome back everyone. Young Investors Podcast time once again. And Hamish Hodder, how are you feeling, my friend?
Not great.
Are you just excited for this episode today?
I am 100% good to go. No, yeah, it's been a...
Sarcasm because Hamish is not feeling well.
Man, I feel like I've said this a few times the last couple of weeks, but earlier this week, I had a stomach bug over the weekend, which wiped me out for a few days, and I thought I was getting better, and now just the last couple of days, it's kind of...
It's come back with a vengeance.
It's come back. So, yeah, I had a shower and it's perked me up a little bit. So,
pooped you up a bit. What?
Perked me up a little bit.
Right.
Yeah,
okay,
no, I didn't do that. None of that during this episode. We'll try not to, but,
toilet humor already. Here we go. This is what you guys are signed up for.
This is what video on Spotify really means.
Oh, golly gee.
No, yeah, we'll see how I go. I'm feeling not too bad.
We've got some cool stuff to talk about, but it's an unfortunate week because I've had a cold.
Yeah,
and
that's right.
You've had your stomach bug, and I've had a cold, which is actually bizarre to have a cold because I haven't had a cold since before COVID, and it's so weird just having the common cold, but not having COVID, because every time you like cough and people look at you and you feel like you just say, no, I don't have COVID, I promise,
Yeah, it is kind of strange.
No, I've tested twice negative for COVID, so I'm pretty sure that it's not coronavirus,
okay.
But I've just been sniffly and sore throat, and I don't know if you guys can hear it in my voice a little bit as well, but I feel okay. But it is very strange just having the common cold in a time where it's made me realize that people's perception or tolerance of illness is now completely different. Because I don't know, like before the pandemic started, if you had a cold, you'd go around places, you'd still hang out with your friends, you'd be like, oh, I got a bad cold at the moment, but no one would really care.
Yeah.
Whereas now
true.
it's like if you so much as sniffle, people are like, what?
Yeah, in public, everyone's heads like snaps towards you.
Exactly.
If you've got some kind of cold. Yeah. The good thing that hopefully comes out of this pandemic is that other countries have already had this habit of if you're sick and you have to go to work, like you have a cold, you just wear a mask. Like out in public, we've never had that I never saw anybody wear a mask in public unless it was potentially someone who maybe picked up that habit from another country. So hopefully that's a habit that Australians kind of adopt, where if you're feeling a little bit sick, maybe you have a bug or something, but you have, or I don't know, maybe don't go out if you have a bug, but if you have like a cold, just wear a mask just to kind of at least protect a little bit people around you. So
yeah. Long story short, you're feeling sick. I'm recovering from being sick. So let's see how this podcast goes.
we do have some interesting stuff to talk about. Of course, we've got some GDP updates to kind of bring through, and some related items that I think you're going to talk about related to that. And then we've got some more Wall Street bets news this week. We've got a new king has been crowned of the meme stock. Hysteria. Okay. So
I think I saw something about that, but I didn't read into anything. So I just heard somebody talking about this new meme stock. So I literally have no knowledge of that whatsoever. So I'm interested to hear what this is about. But yeah, beyond that, we also have a little bit to talk about in terms of SPACs. We're hoping to get through a few questions as well. I've got a few questions highlighted for later on in the episode that we can go through. But with that said, Hamish, who is the sponsor of this week's episode?
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your brokers, or you can do it manually by downloading your trades using Excel from your brokers or doing it one by one. And once you do that, it will track all of the types of gains and losses in your portfolio and give you kind of a very accurate representation of your overall portfolio performance, which is something that your broker very likely doesn't provide you because they might miss out on brokerage fees or currency exchange or something like that. But essentially, it will track your capital gains, your dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio and use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want, or you can also use that link to sign up to a paid plan and you'll get 4 months off a yearly subscription if you do so.
Indeed.
All right.
Sure. So we were talking about GDP last week, but we didn't have the number.
Yes,
remember
that's
that?
right. Yes.
Yeah. So just a quick update in terms of the GDP figure. This is for the US. The advance estimate came out and showed negative 0.9%. So that's an annualized rate. So annualized rate or reduction of 0.9% in terms of US GDP. So gross domestic product is that number does get refined as right. Kind of the data gets more complete. They come back multiple times and refine that data, but it does look at this stage that means 2 consecutive quarters of negative GDP growth,
which is a recession.
Which is a recession. Exactly right. The Bureau of Economic Analysis said real gross domestic product decreased at an annual rate of 0.9% in the second quarter of 2022, according to the advanced estimate released by the Bureau of Economic Analysis. In the first quarter, real GDP decreased 1.6%. So I just thought we'd go, so expenditure view of GDP. GDP equals investment. So what are people spending money on? There's money being spent on investment, consumer spending, government spending, and then net exports. Mm-hmm. And then with that definition in mind, we can have a listen to what they said in this release. It says, quote, "The decrease in real GDP reflected decreases in private inventory investment." That's an interesting one, which we'll talk about. Residential fixed investment, federal government spending, state and local government spending, and non-residential fixed investment that were partly offset by increases in exports and personal consumption expenditures.
Okay. Interesting.
So yeah, any thoughts kind of what you expected with this?
Yeah, so I mean, look, as always, there's going to be kind of a lot of different factors, I think, that kind of go into the overall outcome. But it is, I'm sure you'll kind of talk about through some of the things that drove decreases, like inventory. And interesting to see that it was offset, so driven by increases in exports and personal consumption, which is a kind of, I guess personal consumption is probably one of those big ones where you would expect when there's a negative GDP number for that to have been kind of one of the driving causes, since it's kind of a nice, it's kind of, you can kind of view it as kind of one of the faces of what the country produces, you know, being what people spend their money on, so, or how much they spend. So, yeah, interesting to see. It's always a complex figure with various factors. So, it's not as simple as just going, oh, it's negative. You know, it can fluctuate over time, and there can be periods where, you know, small decreases are not, you know, super out of the ordinary.
And this is why we're seeing just so much chatter about the economy at the moment, is because obviously it's an economy. It's so complicated. It's so complex. And then there are some things that are saying, oh, it's doom and gloom. Would you look at this? And there are other things which are saying, it's not that bad, because everything's just messed up at the moment. Like literally there's something happening that's affecting every single part of the economy.
Yeah.
So it's very complex. And that's why you're seeing a lot of like differing opinions in the news and that sort of thing about, you know, are we in a recession? Are we not? And that's what I actually wanted to quickly talk about, because you know, a quick and easy definition of a recession is 2 consecutive quarters of negative GDP growth, which is kind of funny because I think the White House might have seen this negative GDP number coming. So they actually put out a press release. And I'm not sure, did we cover this last week? I can't remember if we were talking about this specifically last week.
I don't think we were.
But anyway, I'll just repeat it anyway. The White House came out with like a press release saying that, hey, look, I know you think that 2 negative quarters of GDP means a recession, but that's not actually correct. That's not how we do it, which everybody was kind of ripping into him about because it's pretty funny because it just looks like the politicians changing the rules.
And to be clear, I think in the US, what they kind of said in that press release has been the case in the US for a very long time, which is they use this economic body to come up with these factors. But in many other parts of the world, it is agreed that that's kind of a short and fast definition. So it's not like, this definition that everybody has been using is wrong. It is a definition that's used as a measure of of a recession. That's one that is a real measure that we can track. It's not qualitative in any sense, or in for the most part. So 2 negative quarters of GDP will be considered a recession in a lot of countries. But in the US, they do have this economic body that uses other factors to kind of get more of a whole picture of what's going on in the economy.
Yeah. And obviously the White House wants to put out a press release that says, no, we're not in a recession. But they do have a point, as you're saying, that it is a complex issue. So they say in the press release, the National Bureau of Economic Research says the variables typically tracked include real personal income minus government transfers, employment, various forms of real consumer spending, and industrial production. So I'm actually making a video about this at the moment, but I did some digging just to have a look like, okay, so if we take those 4 variables into account, what does the picture actually look like, the way that the White House or the NBER looks at it? So in terms of real personal incomes, they're actually the same as what they were. Well, they're about the same as what they were pre-pandemic. And what's really interesting is that as soon as the pandemic came along, real incomes rose.
Right.
It's like, wait, what? And actually, I just trying to get my head around this, I was doing some digging. And actually, it's because during the pandemic, we lost a lot of jobs. But the vast majority of jobs that were lost were low-wage service sector jobs. And so what that means is that as those jobs are lost, then that gets those jobs fall away from this figure of salaried and wage workers because they're not there anymore. So what happens is the median actually goes up. So if you actually just look at the chart of real incomes, it goes up, and then it hits the pandemic and it spikes up heaps. And then the median's falling rapidly. And if you look at where we are right now, we are on a rapidly falling slope. Right. But of course, what we're seeing now is the opposite effect, where all of those jobs that we lost are now coming back in. Yeah. So it normalizes the figure again. But if you actually look at the absolute value of real incomes where we are right now, we're at the same place as what we were in the last pre-pandemic quarter, which was Q4 2019.
Yeah, right, okay.
So anyway, long story short, real incomes are like neither here nor there. They're not like up massively. They're not down massively. So it's not really saying, hey, look, there's a recession. It's also not saying, hey, look, there's not a recession.
Yeah.
In terms of industrial production, technically industrial production is expanding. It was expanding in Q2. However, Q2, it was at the lowest rate since the pandemic slump or the post-pandemic slump as we were dragging ourselves out of that. So technically not a recession there. Then unemployment, this is definitely the strongest case for the US not being in a recession because the unemployment rate's extremely low. It's at 3.6%.
Right.
And, if I said what's like one of like the defining characteristic of being in a big recession, most people probably say like unemployment just goes up heaps.
Yeah. Yeah, and typically, that's going to go hand in hand with lowering GDP because it's going to drive people to spend less. If they're losing their jobs, they're going to spend less. Businesses will make less money. They'll lay off more people. It's kind of that cycle of businesses' revenue and who's employed as well as what consumers are spending. This cycle that kind of fuels itself. So yeah, you would expect. Typically, if you look at in the US, you look at the unemployment rate across the last 30 or 40 years. Every single time there's been a period of recession, the unemployment rate has been rising, and I think this is the first one in the last 30 or 40 years, the last technical recession where there's been at least two negative GDP quarters. So it's definitely, I think, the biggest characteristic that makes what's happening right now, at least to some extent, different, at least up until this point. Maybe that's going to change over the next couple of years.
Yeah.
You don't want to fall into the trap of being like, this time is different. Everyone's always looking for some statistic that's different to justify why this is not going to be as bad as previous recessions or different from previous recessions. We obviously are not saying that. But yeah, that is an interesting difference that's going on right now. And we'll have to see how that plays out. Maybe there's continuing negative GDP quarters, and through those following negative GDP quarters, unemployment will be rising. And it could just be that the first 6 months, there wasn't that effect, but later it will come, or it might not. So, we'll just have to wait and see.
Yeah. Exactly right, and you're touching on a very important point, which I was going to get to as well in a little second. But before we get to that, so that's income, industrial production, unemployment, and then the last one was consumer spending, and we know that consumer spending is currently at all-time highs.
Yes.
Whether that will remain, who knows? And we've both made videos about Michael Burry lately, how he was talking about how consumer spending is, not consumer spending, rather.
Savings rates.
Savings. Yes, savings rates at like very low levels.
Yeah.
Bank accounts are being depleted. So whether that happens. But at the moment, consumer spending's at all-time highs. So again, you think consumer spending's up, that's good, it keeps the economy humming, no recession. So they do have a point that right now, well, not right now, for Q2, these figures do look like the US is not in a recession, but as you were just talking about, does that picture change?
Yeah.
Because, we can even look at, like, going back to what I was saying before, negative GDP growth in Q2 was predominantly a result of a decrease in inventory investment. So what that means is that businesses right now, as we were talking about last week with Walmart, businesses are overstocked and they aren't investing to replenish their inventory.
Yeah.
We said last week, Walmart was saying that people are not spending on anything except essentials.
Yes.
Because, inflation's so high, they're running out of money, they're tightening the belt.
Yeah.
But of course, this inflation high, more money gets spent on essentials. That leads to a drop in discretionary spending, slowdown of earnings, plus a slowdown in manufacturing. And then ultimately that ends up with companies trying to themselves tighten the belt, and that leads to layoffs, leads to less income, less spending, lower earnings. It's a cycle and it continues. We might not be in a recession right now, but if you do look at some of the trends we're seeing or some of the things that are popping up at the moment, the signs aren't great. No. And as we were talking about with the unemployment, one of the big signs of recession that's coming is widespread layoffs, and that's actually there's been a few stories in the news this week, but I'm going to hone in on the one we were talking about last week, which is Walmart, because in the news this week, they came out and said that they're going to be doing a lot of layoffs.
Yeah.
So should I just keep flowing? I'll just flow straight into this next one.
Yeah, just go straight in.
All right, so it says Walmart is cutting hundreds of corporate roles in a restructuring effort, according to people familiar with the matter, a week after the retail giant warned of falling profits. The retailer began notifying employees in its Bentonville headquarters and other corporate offices of the restructuring, which affects various departments, including merchandising, global technology, and real estate teams. Around 200 jobs in total are being cut, said one of these people. Walmart spokeswoman confirmed that there were roles being eliminated as the company updated its structure, but said the company was also investing in other areas and creating some new roles. Last week, Walmart warned that its profit would decline in the current quarter and fiscal year because it was having to mark down apparel and other merchandise that is piled up in stores. That's exactly what we were talking about last week. Retail said high prices for food and fuel were causing US shoppers to pull back on other categories that are more profitable for it.
Okay, so they're cutting back, but it's not to like any kind of wide degree, I guess, at this point. 200 jobs in the scheme of Walmart, I think is relatively small.
It'd be nothing.
But yeah, I mean, certainly Walmart, I don't think is the only business at the moment that's going down this avenue. I think it was, I think it was Coinbase. I don't know if you saw this. I think it was Coinbase that laid off a quarter of their staff.
18%.
18%. Sorry, my bad. So,
Robinhood, you're thinking of.
Robinhood, was it that laid
23%.
Yeah. So, here's a couple. And then look, obviously they're in areas that are getting particularly damaged given the stock market collapse and the cryptocurrency market collapse. So, that's something different to a business like Walmart or something like that. But yeah, certainly there's quite a few businesses that are looking to ways they can cut costs, and marketing is one that they can usually cut pretty quickly. And a big cost for most businesses is labor, usually the largest cost in a lot of cases. So, it unfortunately is a place that the businesses look in short-term pain.
And this is the news we're getting right now. So now we're in Q3. And this is the news we're getting. Like, while the overall US job market has been strong, a handful of other major employers are pulling back on hiring or cutting some jobs. Ford Motor Company is preparing to cut thousands of white-collar workers, while technology giants such as Microsoft and Facebook parent Meta Platforms have pulled back. Investors will get another update on the health of the US job market on Friday when the government releases data for July. Economists surveyed by the Wall Street Journal think Friday's jobs report will show that they added more than 250,000 jobs in July compared with 372,000 in June. So I don't want to make a big hoo-ha about this, but this is just like one of the trends you can start to pick on that gives you a little bit of anecdotal evidence that maybe we are trending towards that recession territory. Because I actually went in and I looked up, okay, if we're talking about layoffs, because I know there have been other companies doing layoffs. What are some of the other companies? So some of these companies are big, some of them are small, but it's still a sign, I guess. Rivian cut 6% of their workforce. Peloton cut 2,800 jobs. Twitter's cutting 305 jobs from its talent acquisition team. Tesla reported cutting 10% of their salaried workers. Spotify is on a hiring slowdown. Coinbase, as you said, Hamish, 18% of their employees. Robinhood cutting 23% of their employees. And Nestle, Tesco, Unilever all doing job cuts at the moment.
Rivian, I thought they were doing so good. Didn't they just make like their first 10 trucks or something? Didn't they make like 10 cars last year?
Yeah, they made another one. Yeah,
they made another one. Oh, okay,
another one. Yeah. So handshakes all around. Let's go home early, boys. Have a beer. Well done. Another truck.
What's 6% of their workforce? Is that like one out of like 13?
One of their guys. One of their guys lost his foot.
Right. Okay. So one. Yeah. So they let go of one guy.
6% of that guy. Yeah. Unfortunately, got cut.
Yeah.
On the manufacturing line. Yeah.
Oh boy, Rivian.
No, but I mean, you don't want to read into this too much, but I think signs are. I mean, what are we seeing in the media more at the moment? Are we seeing news reports that business is booming and companies are expanding their headcount? Or are we seeing the opposite?
Yeah, it's a bit of the opposite. It's funny because there's been quite a bit of positivity out of earnings this week, and the last couple of weeks. But it's all really been like, oh, business did slightly better than expected, but they still had a 6%, 10%, 15% decline in revenue or profits. So it is kind of funny. It's certainly definitely, if you're looking at the earnings on an objective basis, not considering things like where the market expectations were, pretty much every business is either seeing a decline in revenue or a decline in revenue and profitability. It's been rough the last couple of weeks, but
But anyway, that is US GDP and the layoffs that have been reported in the media over the past week.
All right.
You want to talk about this?
Let's talk about
meme
Wall Street
stock to end all meme stocks.
Yeah,
what's
let's talk
going
about
on here?
So we've moved on from Rivian. We've moved on from GameStop. We've moved on from Hertz. We've had
AMC.
Look. I'm going to be honest. I thought we had seen AMC, BlackBerry. I thought we'd seen the end of meme stocks, at least for now. I thought I thought the market's collapsing, bubbles are bursting, Rivian's down 90%. I was like, my job here is done, I thought maybe at least we would have a period where
I love that.
I thought we'd have some kind of calm period. The IPOs have slowed down. The SPACs have slowed down. I think maybe we had a story on that. So, things are calming down. I thought, we're done. We're done with the meme era. But of course, when everything is calm, all of a sudden we have a new king to be crowned, which is AMTD Digital, the new king of the meme stocks. This is an absolutely astronomical bubble, speculative bubble in a stock that's far exceeds anything we've seen. Rivian was an incredible story. I think it wanted to get up to 150 billion in market cap, while they were making, a handful of vehicles, as we kind of joked about just before. So they were, a big one. And I think now they're down in I'm not exactly sure, in the 30 to 40 billion range. So they've come off, quite considerably, but they were quite a big one. AMTD Digital is,
I don't even know I've never heard of this company.
Well, I never heard of them either. Okay, so I went on their website to see what they did. They're a Hong Kong-based fintech, financial tech company, and I wanted to know, what do they do? So I went on their website, went to the About section, and this is the paragraph that describes what their business does, and it's great. This is their description. Fusing synergistically all elements within AMTD SpiderNet ecosystem using digital means harnessing and magnifying the power from each partner to create a force with meaningful and influential social, technological, and economic impact. So that's what the business does. It's super clear. What does that even mean? I mean, it sounds exciting. I kind of want to invest now. Like, that sounds great.
No, you don't.
Harnessing and magnifying the power. Like, that's incredible. That's you don't get that with, that's not on the Berkshire website. Come on.
Yeah, true. I'm still on the first line. Fusing synergistically all elements within the AMTD SpiderNet ecosystem using digital means, harnessing and What the hell is this on about? This is literally one of those descriptions where I haven't, I know less about this business now than I did before you said that.
Yeah, it really bothers me when businesses do this, where they give kind of some inspirational thing of this is, we're an amazing company, synergies, and it's just like, what do you actually do though?
Tell me what you do.
What services do you sell? And it's always from some weird tech company, but yeah. Anyway, so I really don't know what they do. They do some kind of business tech, fintech services.
Imagine going to a party. You're like, oh, hey, mate, how are you? Oh, yeah. So what do you do? And the person just says, oh, I fuse synergistically all elements within the AMTD SpiderNet ecosystem.
I'm going to use that.
So sorry, what do you do?
Next time
I harness and magnify the power from each partner to create a force with meaningful and influential social, technological, and economic impact. All right, mate.
How about you? What do you do? I'm an accountant.
I make YouTube. I make YouTube videos. Make videos for the internet.
You just shy away after that.
Sorry, mate.
That's a.
Oh wow,
So yeah, look. I mean, with an about section like that, I mean, it's no surprise what happened to the stock. They went public 2 weeks ago, so they're one of few IPOs. I mean, of course, there's still quite a lot of IPOs. It's a big global market, so there's always IPOs going on, but there are quite a few less going on at the moment. But they went public 2 weeks ago, and I think they were a spin-off. They were a subsidiary of a larger tech company in Hong Kong. So they kind of spun that section, that subsidiary off. And it went public at a price of $7.80 with a market cap of $1.4 billion. It was listed on the Hong Kong Exchange, but it's also an ADR on the New York Stock Exchange, which is how people around the world are able to essentially get easy access to invest in this business. And as far as I can tell, in 2021, the company made about $25 million in revenue. So even from the get-go, at $7.80 a share, at $1.5 billion market cap, they were already, they're already quite rich in terms of valuation. But it doesn't stop at the IPO price. It kind of kept going. It was hot out of the gates. First week, it went from $7.80 to $70 a share. So it did a 10x in the first week. Now a $10-15 billion company. Again, $25 million in revenue. The next week, didn't stop. It tripled, or almost tripled, to $180 per share by the end of the second week. So by the end of the second week, it's gone from $8 per share to $180. So it's already a 20 and a bit X. And then, so it's been kind of 2 weeks and 3 days since its IPO. In the last 3 or 4 days, it has gone bananas. It's gone crazy. It's now rocketed to $2,555 per share, up from $7.80 2 and a bit weeks ago, about 20 days ago. And that represents, I had to get the calculator out for this one, an increase of 32,700% in 20 days.
What?
So that's not a bad return on investment. If you got in on this IPO, which I'll talk about the Wall Street Bets Reddit page in a bit, but there was somebody on the Wall Street Bets Reddit page that on IPO looks like they invested in this company.
Oh, so serious?
Hopefully, I'm praying for them, for the win of their life, that they held on to that investment, because just for fun's sake, $100 investment at IPO would have peaked a couple of days ago at $33,000.
Oh my God.
I'm praying that person who posted it on Reddit held on.
That is ridiculous.
It does bring up a good point around speculative businesses, that how on earth would you have held on, right? Imagine if you invested $100 and it went to 1,000 or it went to 10,000. Are you really going to have the stomach to hold on to that to 33,000? And at what point do you get out? Do you just hold it forever now until you just ride the wave? Or so, without any idea, of course, of what the business is worth, how could you obviously it's a hindsight bias. Oh, if only I'd invested. But pretty.
This happened a lot with Tesla stock back in the day, the one that I was watching. There were a lot of people that were buying Tesla stock back before all the stock split and whatever. And I think they're doing another stock split soon. But stock was like $250, $300, something like that.
Yeah.
And then it went up to like $800, $900. And everybody that was like the biggest Tesla bull, besides a select few, all of the people were just like, yeah, okay, I'm out now. We've done it, guys. Yeah. We've done it. Little did they know, of course, the stock would go on for a long, long time to go. But yeah, it's like if you have a stock that goes up like that, the chances that you bought in at the bottom and you sold at the top and actually harness that full return, very slim, because as that stock's going up and you know that it's going up, especially in this case, it's going up but literally based on nothing. It's just like you're definitely going to take your money at some point.
Yeah.
Unless you just, I don't know, didn't pay attention. You chanced it. You came back on the right day.
Yeah,
and you're like, I wonder how that started. I think I bought some of it, didn't I? What's it at now? What the hell?
And look, honestly, I guess if you're just somebody who's just messing around on the stock market, gambling, and you're just placing a bunch of bets, you probably could have potentially been in that situation where you didn't know about it, and then all of a sudden it's all on the news. Because I only saw it come up in the last like 24 hours, really, right. on Twitter and on CNBC. So yeah, it has been very, very quiet, even though it's been going up thousands of percent for a couple of weeks. But of course, a big contributor to all of this was Wall Street Bets, the Reddit the Reddit page, subreddit. There were discussions, as I just mentioned, of AMTD Digital that started as soon as it IPO'd. So you can just go back and search for AMTD Digital on the Wall Street Bets page, and you can see there was one person I think who posted about the IPO, and then every couple of days there was somebody who mentioned it. But there was really very, very little discussion about it up until last week. Last week, the stock became one of the biggest mentions on Reddit's page. And I think according to CNBC, it became, on Tuesday this week, the most mentioned stock on Wall Street Bets. So, it basically got picked up over the last week and into the Wall Street Bets meme hysteria ecosystem.
Stratosphere.
Yeah, exactly. And that, of course, fueled over the last 3 or 4 days a 2,000% increase, which was kind of the last big hurrah for this stock.
That's insane.
Yeah, which is it is crazy, especially to see that, given the rest of the markets are kind of falling, and yeah, as I said, I would have expected the popularity of these kind of speculative stocks to kind of die off, but and given the size that it got to, it's kind of incredible that it was a speculative stock like this with, again, 25 million in revenue last year, was able to reach at its peak 2,500 per share, which was a market cap of just under $500 billion.
What?
Which is, as I said, this is the king. This is the king of meme stocks, right?
That's like one of the biggest businesses in the world.
Yes, it would if it was in the S&P 500, which it does not qualify for. Would be the size of the top. It would be in the top 10. So
it'd be in the top 10.
Yeah. So I didn't actually check global public companies, but I think it's got to be in the top 20, top 30 at least. Global companies. At least it was.
How is this? Is there some sort of like corruption here? Is there? This seems too ridiculous. Hey, like I'm not even joking around. This seems like too ridiculous.
This is the power of Wall Street bets.
Is this actually legit?
Yeah. It's
what the hell?
It is kind of insane. And look, I haven't really looked deeply into this, and I haven't looked into whether there was a squeeze going on or whether
there must have been
potentially
something.
Potentially, the fact that it's an ADR and that it's Hong Kong listed has something that affects the volume of the stock, allowing it to go up so quickly. But yeah, I mean, this was just a couple of weeks ago. This was a tiny business. I mean, it was only $1 billion in market cap when it IPO'd. So the volume, and it was a foreign listed company. So, the volume of it would have been incredibly low. I guess with momentum. But yeah, it is incredible. It was bigger, at least a couple of days ago, than Facebook, than Meta Platforms, which is crazy. Yeah.
Flipping bonkers, mate.
Yeah, so it's the king. As I said, Rivian, I think, got to 150 billion. So in terms of businesses that really basically are pre-revenue, getting to $100 billion in market cap or more, this one takes the crown. This is the winner.
So what's happened to it? Is it still? I haven't even ever looked at this AMTD. Like, is it still?
Yeah, so it's
10th largest company in the world or whatever it was.
It's coming down. It's still in the top 20. It's dropped 60% since Tuesday. But as of today, at least, so today's Thursday, it has a market cap of 200 billion. Google's market cap is wrong, by the way, so you have to use Yahoo because they have the shares wrong. But so market cap of 200 billion, which still puts it in the top 20 if it was in amongst the US companies there. But yeah, it's fallen 60% in a couple of days, and I would imagine that the bubble of that bubble will burst because it's kind of crazy, right?
Man, now I feel like I need to read this. Need to read these articles for myself. This just sounds so ridiculous.
I mean, and the truth is, look, we should have seen this coming because, as we saw on their page, they are in the business of harnessing and magnifying power, and they've managed to do it with meaningful and influential social impact.
Yeah. Wow, man. Wow.
So there you go. Yeah.
This just blows my mind. This is just beyond belief.
It is. It's fun.
$300 billion meme stock that makes GameStop look like child's play.
Yeah.
CNBC.
So what was GameStop's? I mean, GameStop is tiny, so that's the other thing that's so impressive is even as as being a multi-billion market cap business, it still went up thousands of percent in a couple of days, which is very different to something like GameStop, which is still it's still quite elevated at 12 billion, but it was coming from 100 million or even less than that, I think maybe, of market cap. So it was coming from being very, very small. I know. I wonder what GameStop did.
AMTD Digital generates revenue primarily from fees and commissions from its digital financial services business. There you go. I still don't know what they do, but that's digital financial services business.
So synergies.
Synergies. Yeah. Change the world. But yeah, I don't know. What was the biggest that GameStop got? I don't even know.
So GameStop, I think it looks like it went up from kind of before the short squeeze, it went up about 6,000%. And this one did 32,000%. So it destroys it on percent, it destroys them on size. It's pre-revenue basically. Well, not really, but essentially. It's it ticks all the boxes.
It's
just
been
the king.
Caught up with Wall Street Bets. Well, good on you, Wall Street Bets. Congratulations.
It's the king. So
wow.
Yeah.
Wow. I honestly, that blows my mind.
Yeah,
that genuinely blows my mind.
Yeah, well, that's what the internet will do. I think we're probably. I don't think we're not seeing the end of this. It's something that is new to the stock market where communities can rally behind these businesses that really. It's purely a speculative investment. It's not about the business at all. That's something that just didn't happen before.
470 billion, Hamish. 470 billion. It's like if it goes up 32,000% or whatever and it gets to like 1 billion, then surely at that point you're like... But 470 billion?
Yeah, the game now has to be, can we get $1 trillion? Can we get a pre-revenue company to $1 trillion? It's like, you know what it's like? It's like at a carnival where they have that hammer and you have to hit it and you have to get the thing as high as possible. That's what Wall Street Bets is playing at the moment. It's like what stock? What rubbish stock can we get to shoot up to $1 trillion? I would love to see $1 trillion. That's what I want to see. Oh
God.
Organize at Wall Street Bets. I don't know what you need to do. Get yourselves organized. Find something. Find a stock that you like. Maybe it's Texas Roadhouse. Maybe it's Netflix. I don't know. Like just. No, I'm just kidding. But
you're gonna start posting to Wall Street Bets under it. Now. You're like, hey guys, massive short squeeze coming on Netflix. Am I right?
Yeah, that'd be pretty funny. No, but I would love to see that. So I want to see $1 trillion.
You know what we're gonna. I already know what we're gonna be talking about next week. Then, in fact, I'm gonna write this article in before it even exists for next week, so we don't forget. AMT Digital raises capital. Sold 3 shares this week and raised $53 billion.
Tripled their revenue.
Oh dear. Anyway, so that'll be there for next week. We'll talk about what capital raise AMT Digital does now that their share price is high.
Yeah, should we move on? Should we do a little prediction? What's going to happen?
A little prediction.
What's going to happen to?
It's got to go down.
It's going to collapse.
It's going to go down super hard. I don't know what percentage, where it's going to be, or anything. But Brandon says it's going down. It's going.
Is it below?
Down.
Let's do a line over or under. So it's at 200 billion now in market cap. Is it going to be over 150? Or under? I want to go lower than that.
100.
100. Okay. Over or under? 100.
Under.
Yeah, I think under too. Let's make it lower then because we both said under. Like 70.
Over. I'll say over.
Okay, I'll say under. There we go. We'll see. 70 billion. Okay. Is it going to be higher or lower? That would be crazy if it went back up. Maybe this is the one that can be the trillion. Maybe this can be the trillion.
Maybe.
I shouldn't count it out. It's only been 2 weeks. It's been on public, so it's still got
let's
time.
check back in a week. All right, shall we move on?
Yeah, what else have we got here?
I'm just going to talk quickly about talk about speculation. I thought this story is about how speculation's going out of the market. You've stitched me up with clearly speculation's still there. One element of speculation has left the market
on average,
and that is the SPAC market, special purpose acquisition companies. Geez, they were the rage. Well, they were really like last year, I reckon.
Yeah, last year. Thing. Early last year. Was it
2020?
No, it was like early last year. Same with GameStop. Everything was early last year. Was really when I think a lot of the speculation coming out of the pandemic, out of 2020. That seemed to be when there was kind of quite a bit of speculation going on, as far as I remember.
Yeah. So anyway, so special purpose. So these are the blank check companies. If you can't remember about the SPACs, it's essentially where someone says they're going to start a blank check company. Investors give me a lot of money, and then they go out with that blank check company, and they acquire a private business, and it's a different way instead of the IPO process of taking a private business and getting it onto the public markets. It gets acquired by a blank check company. And these were dime a dozen. Every big investor was trying to, push their own SPAC. I think Bill Ackman was probably the most notable one, wasn't he?
Yeah, he had a couple going. I don't know if he ever ended up. What was his big one? It was like Tontine Holdings or something. I don't actually know if he ended up buying a company. There was a couple of potential acquisitions. He was potentially looking at Stripe, Bloomberg, a couple of big companies. I don't believe he ended up getting anything.
I'll get to that in a second.
Okay, sorry.
Yeah, but anyway, it's just a quick CNBC article that caught my attention, basically saying the SPAC boom is officially a thing of the past because not a single special purpose acquisition company was issued in July as the market slowdown turned into a screeching halt, according to CNBC calculations of SPAC research data. Sponsors who once took advantage of a hot market were forced to pause as investor interest waned and regulatory pressure ramped up. So it said in the article that in 2020 and 2021, more than 600 SPACs were hunting for targets.
Whoa.
How crazy is that?
Wow.
That's 25 a month. 25 SPACs a month over that time period.
That's crazy.
Which is pretty crazy. It puts it in perspective. In July, there were 0.
Wow. Okay.
Yeah. Not a single special purpose acquisition company was issued in July.
That's crazy. They wanted to make way for AMTD IPO.
Yeah, exactly. Yeah,
that is
ultra pump.
Yeah.
But have a look. Obviously, this is a podcast, so we can't show it, unfortunately. But Hamish, have a look. Can you describe what this chart looks like?
Yeah. Well, we can put this chart on
time.
We'll put this chart on the video version. I'll get our editor to slap this chart on the video version. So go head over to Spotify or YouTube if you want to watch the video version of the podcast. But
for those that can't watch our beautiful faces,
so
we've got what this chart is telling us. Hamish, or what it looks like to you.
These are monthly SPACs, I presume. So we've got over 40 in October, November, December. Last year, January kind of slowed down to about half as many, about 20 in February as well, around that. And then another 50% kind of drop off in March. It looks like about 9 or 10, and then similar in April, May, June was a drop off, and July, zip. So it's a big declining chart. Big
chart,
dry up.
If you can see me right now, the chart kind of looks like this: dunk, 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 dunk through the floor. So I think that shows you that SPACs are no longer in favor. It was an interesting quote here. The quote from this article is, "I think that was a once-in-a-lifetime experience, just like during the internet bubble," said Jay Ritter, University of Florida finance professor. "A year ago, the whole market was overpaying, and now we have a reset. Giving a valuation of $500 million on a zero revenue company, those days are gone." Well, Mr. Jay Ritter, clearly there's still one more, isn't there? But generally speaking, I think he's right. Like a lot of the speculation has died down, regardless of what we we're just talking about. Generally speaking, the time for speculation is over. People like Robinhood is reporting just a massive drop in the number of trades on their platform, which is predominantly retail, like new retail investors. So the kind of speculation is dying out, which is quite interesting. What else have I written here? A recent acquisition highlighted just how absurd SPAC valuations were during the mania. Nikola recently announced it will buy Romeo Power in a $144 million all-stock transaction. That's just about 10% of Romeo Power's valuation when it merged with the SPAC less than 2 years ago.
That's crazy.
So, Things are coming back down to earth. Along with issuance drying up, liquidations are rising amid difficulties in finding suitable targets. Three deals were tabled last month, including Bill Ackman's record $4 billion Pershing Square at Tontine. Is that how you say it?
Tontine Holdings. Yeah.
Pushing the number of liquidations this year to 10 deals. In all of 2021, only one SPAC was liquidated, according to calculations. So a lot of these are being shut down now.
They're done. Yeah.
Yeah.
There you go. Interesting stuff. Yeah, and look, it's not surprising. We've looked at even just IPOs in general before, where leading up to some kind of crash, typically valuations generally are elevated and people are euphoric. So businesses want to list their shares and sell their shares for as much as possible. And when the market crashes and people are being a little bit more cautious or a little bit more pessimistic about what price they're paying for businesses, there's less IPOs. Less people want to take their business public. They might hold back a little bit and wait till things are a little bit more optimistic. So, this is kind of typical market behavior when there's a recession or when there's just at least a market crash going on. But yeah, it is kind of funny that July had 0 SPACs, but it also had the most speculative listing of all time. Yeah. Thus far, at least.
It's a little bit contradictory, isn't it?
Well, no, it's not contradictory. It's just one is a view of what, on average, SPACs and IPOs are doing, and one is of the reality that within that there's going to be outliers. There's going to be, anomalies that happen. There's still going to be speculative IPOs here and there, even though on average there will be, far less.
Yeah, that makes sense. All right, should we move on?
Yeah.
We'll go into some Q&A. Actually, I wanted to do this one down the bottom first because it's kind of a news article as well. But I actually didn't hear about this. So thank you to the listener who sent in this question. It says, also, did you guys see the Chipotle promotion? They're giving away $200,000 in crypto to play their game, which is called Buy the Dip.
I didn't see this. I haven't seen this.
This is flipping bonkers. What is Chipotle doing in the crypto? I just don't understand. It's such a bizarre team up. I mean, clearly they haven't taken. I mean, at this point, I want to put in our resume to take over Chipotle. What are they doing messing around with cryptocurrency? Just flip and make some Mexican food and be done with it.
Yeah.
And put in more Chipotlanes.
More Chipotlanes. Yeah, exactly.
How hard is it to run a flipping Mexican restaurant? Mexican fast food chain. Anyway, the United States-based fast casual restaurant chain Chipotle has started an online game which will give customers the chance to win more than $200,000 in crypto. In a Monday announcement, Chipotle said that through July 31st, fans would be able to play its Buy the Dip game using their rewards accounts. The company will give away $45,000 in Bitcoin, $10,000 in Ether, $13,750 in Solana, $14,250 in Avalanche, and $14,250 in Dogecoin. Well, where's the Terra Luna? Can't we give away some Terra Luna? No. It's the quote from their Chipotle chief marketing officer. So there you go. It's all marketing. But anyway, his quote was, "We want to build the next generation of Chipotle fandom by connecting with the Web3 community."
Right. Okay. Whatever that means.
Just sell a flipping burrito. Seriously. Don't worry about Web3. Just sell more burritos. Like, come on. Anyway, you want to know how this works?
Yeah. How does it work? Let's get involved.
So, after entering the game site, players will click play Buy the Dip and be prompted to sign in with their Chipotle rewards account. Players will then reach a how to play screen that provides instructions for the Buy the Dip game. It's not any sort of like trading or anything like that. It's very basic. They can then click play now. Players will hit start to make the crypto line start to move. Players will then have to click Buy the Dip when it comes up for a chance to win free crypto, 1 cent guac or 1 cent queso blanco. If players win the prize, they will have 15 seconds to claim it or swap it for a chance to win a different prize. If players don't win a prize, they can click try again for another chance, and they'll have 3 chances to win every day. So it's not even a game. It's just like log onto your rewards account. The crypto price moves, I think. I don't know. I haven't played. And you just press a button or something like that. But I mean, come on. This is just bloody stupid, isn't it?
Yeah.
Surely.
It'd be pretty funny if it was just a lesson on how speculative crypto was. And it's like you join the game and it's like you lose. They just don't give away any prizes. It's like, so funny. Oh, and you've won $10,000. Oh, and it's gone. And it's available in Voyager. Oops, your account's frozen. Sorry.
That would be pretty funny.
Yeah,
That'd be pretty funny.
Yeah, it's interesting. I mean, look, they're just jumping on they're looking at their demographic and trying to jump on some kind of trend for marketing.
Yeah.
I mean, it's fairly common for restaurant businesses to do that kind of thing. But it is just funny to see it from a crypto perspective. You don't see that very often. But yeah, there you go.
Yeah, there you go. There you go. Yeah, I don't know what to make of that, to be honest.
Yeah.
I mean, whatever. Companies can promote themselves in whatever the way they want. But like, honestly, if I was Chipotle, save you $200,000 and then put it towards increasing your sales or something. Like,
I think it's a good idea when companies like that do games. Like I think McDonald's Monopoly game is probably one of the most successful campaigns that they do every year. Just because
I actually think I read somewhere that is the most successful.
I wouldn't be surprised.
Promotional event.
Yeah.
In the world.
Yeah. Well, everyone.
I don't think there's any promotional event that tops that game. I can't remember where I read that. I'm pretty sure I'm correct on that.
That wouldn't surprise me at all. They give away millions in prizes, so it obviously clearly drives millions, if not more, in additional sales. And it's because everyone understands how to play. It's fun, and it gets people interested in.
And you also
going
win
to
quite frequently as well. So
yeah, they've got decent prizes. I mean, even just like just getting free,
even if you get a free fries
meals
or something.
Yeah, exactly. Yeah. So. Yeah, it's interesting. I think Hungry Jack's, which is our Australian Burger King, I think they're doing like an Uno promotion or something. But how does that even work? I mean, at least like you don't collect cards in Uno. You want to have none. Like at least in Monopoly, you want to collect the set, so it makes sense. You you peel it off and you collect. Why are you collecting Uno cards? Isn't it the person who has none the winner? Anyway, I don't actually know how the promotion works. But yeah. There you go.
There you go.
All right. Is there any other questions here? Do you want me to?
Yeah. I put some of the ones in bold. We can do if you want.
Yeah.
This is an interesting one.
Yeah. Okay. I'll read this one to you. Let's say you stumbled upon a company that's exceptional in terms of operations and financials, and it's undervalued. What will deter you from investing in that company? Be it something about the management team or the business. What does it say? In brackets?
Like sin goods, like unethical goods or something. Like giving an example.
Yeah.
This is an interesting question, I think, because it's basically saying, okay, assume that the numbers are all as you want. What turns you off from a company when it's not like it's completely not about the numbers,
Yeah.
So I had a bit of a think about this, and this is by far an incomplete list. This is not the complete list by any means. But I just went through my kind of 4 pillars, and assuming the valuation's correct, I kind of start at the top. And the first thing that would definitely turn me off is if I can't understand what they do. Even if the numbers are great, if I just simply don't get it, if I don't understand the industry or what they do, then I wouldn't buy it. If the company just doesn't align with my values, like sure, there's probably a lot of oil plays right now that are probably popping. Their numbers probably look great. But I'm not about investing in oil. That's just not me. So that's one of the reasons. No moat. And I kind of toyed with this one because if the numbers are all good, then the argument's probably that this company probably would have a moat. But I think if you couldn't like actually think about it and identify a qualitative moat, then I probably wouldn't go along with it. Yeah. And in terms of management, sorry, all I
was going to say is it kind of depends on what you mean by the financials are good. Because if you could say like the top level service financials could be good, but it could be masking the lack of a moat. It could be growing inorganically. But when the question says the financials are good, I kind of interpret that as being not just the surface level numbers, but overall the business is in high quality. The way I took it
was that everything you could look at in terms of a number ticks a box.
Yeah.
So nothing numerical is a cross. But then from there, the only other thing I would think of would be in terms of management, things like if they're like obviously salesmen, they're not actually genuine managers. They're just trying to sell you a dream or sell you the company. If there's like a lot of insider selling, or there's like a lot of management staff that high up management that's like leaving or something like that. But that's kind of where I got to. I'm sure there's a squillion more things. Is there anything else that you can think of that?
Of course, all the things you listed, I think are probably some of the main ones. On top of that, I mean, it's in the question, but I think the values of the business and what they're selling, I think, is a big one. I think you should want to invest in companies that you would be proud to invest in. I think that's important. It's certainly important for me. It actually drove somewhat of the decision, not the entire decision, but part of the decision why I no longer am invested in Facebook, kind of how I feel about some of their products and what value they provide to people or what value they kind of extract from people. So I think having, your personal values there, I think is important. Even though from a financial perspective, the business might be incredible, like a gambling business, for example, or something like that, then if that goes against your personal values, it may or may not. But if it does, then I think not investing in that business is the way to go. You want to have a portfolio of businesses you're proud to own. So
nice. I agree. I certainly agree. All right, should we wrap things up?
Yep, let's do it.
Sweet. All right. Well, thanks everybody for tuning in today. As always, if you have a question or a discussion topic or anything like that you want to send in for us to talk about, you just go over to the YouTube version of the podcast, youtube.com/young investors.
The Young Investors podcast.
Investors.
Yeah.
The Young Investors Anyway, just type Young Investors into YouTube. It'll come up. Go over to the most recent podcast and then just drop a comment and we'll chuck it into our Google Doc and we'll probably end up running through it. But apart from that, guys, thank you very much for watching, listening, however you're taking in the podcast. Well done, Hamish. You got to the end, mate. How do you feel?
End. Not as good as...
You look like you've perked up a bit, actually.
I'm not feeling as good as at the start, but I'm doing okay.
Okay.
Yeah.
All right. Well, probably a good time to wrap it up. We'll turn those lights off and go back to bed, mate.
Yeah, I've got a shocking headache from this light, but
no.
That's okay. Yeah.
That's the thing about looking into bright lights. But anyway, save that topic for another day. Thank you guys very much for tuning in. As always, we really do appreciate it. We love doing this podcast and we love interacting with you guys as well. So thank you very much for tuning in. But with that said, we'll see you guys in the next episode.
See you guys.